welcome back to another trade recap. This is the first trade, first winner, first short of the week, right? Week starting Monday, 24th August. And I want to break it down. It was an extremely simple trade, pretty much A plus textbook. It's a textbook trade. Nothing really went wrong with it. So going into the session, I had a bearish narrative because when you're looking at the volume profile, value area has just been building lower. You always want to follow value area. Value area represents the satisfaction between both buyers and sellers. So if this level continues to build lower, that means sellers are getting more aggressive and bringing price lower, overwhelming buying supply with aggressive selling demand, and the buying supply can't keep up. So the market has to move lower. If aggressive buyers now step in, or buyers in general, they now step into the market in an attempt to bring price higher, but it doesn't really move the market, that means they are satisfied, right? There is just enough demand for the market to facilitate transactions within a consolidated range or within a balanced state of delivery. So value area as a result continuously shifts lower because buyers are agreeing on the lower prices set by the overwhelming aggressive selling demand, right? Hope that's clear for everyone. So once you get that narrative and you're looking for bearish confirmation, you want to identify, are we in a balanced or imbalanced state of delivery? And this is easily determined by pretty much yesterday's or the prior session's balance range. Identify the prior day's balance range, and if we were playing outside of that prior day's balance range, you are in an imbalanced state of delivery in a nutshell. In simple terms, that is what you are, that's the current state you're playing in. So when you're in an imbalanced state of delivery, this is where you would expect for large expansion plays. However, that doesn't just mean short anywhere within the market and you're looking to ride out, move lower, or long anywhere within an imbalanced state of delivery to the upside and enter whenever. You still want to see your entry confirmations, which is exactly what we had here. So this is for those who are unaware, this is my regular trading hours chart. So it only shows 9:30 a.m. New York time to 4 p.m. New York time. So the candles before that, electronic extended trading hours, is not going to show any of those candles. But regarding this candle currently, here's what we had. 9:30 opens, buyers. So, as I always mentioned, there's a slight bug with Excel charts right now where the big trade bubbles aren't necessarily showing correctly on the range chart, right? So this is why I use the time frame charts, because you could see it shows you the same price action, and I'm just looking to cross-check the levels, right? If at certain levels where we didn't have big trades on a range chart, is it showing on our time frame chart? So if you look at where my mouse is, it should you should see it here. The axes are lining up with each other. So where we had this level, if you look at the axis on the X and Y axis on the right chart, which is my range chart, it should align with the same level. So bear that in mind when I'm trying to explain it and you don't quite necessarily understand. For example, if I say we have a buying absorption here, actually no, if I say we have like an aggressive buyer here of 95 contracts and you don't really see that, look to the left because it most likely will be there. The left is the correct one. So going into the session, large movement lower. I don't like to trade the first 10 to 15 minutes. So I let this play out, I let the volatility play out, but I'm still scouting to see what the market is currently doing. And what we currently get is large bearish movement lower. Aggressive buyers are trying to step in here. So you see how you have aggressive buyers in the form of blue big trade bubbles. Blue big trade bubbles, they represent aggressive buyers, a large quantity of aggressive buyers that I've just filtered out. Red bubbles represent large negative, large sellers and large aggressive sellers, and they just filtered out as well. So, that's what they are. That's what the big trades are. But you could see we have large aggressive buying, but they don't move price higher. You see within this candle over here and within your cumulative volume delta, as well as your footprint bar statistics, positive delta, difference between aggressive buyers and aggressive sellers. So when you have positive delta within this overall candle, that means there are more buying demand than selling demand. However, if the candle closes bearish, like how it's doing here, that means there was more selling supply. So aggressive buyers, despite being in control, they were just buying into the selling supply, right? Aggressive buyers hitting the ask, aggressive sellers hitting the bid. So ask are just your sell limits. And they don't get rewarded with higher price action. And as a result, we continue to trade lower. And these are the key levels over here that you want to specifically be focusing on, because if I make it more clear. Right, you had a battle of orders here. You had a battle of order where aggressive sellers, they don't get rewarded either. Aggressive buyers start stepping in, but they don't really get rewarded either. So whether we continue higher or lower, that would determine who wins this current battle. And as you can see here, sellers clearly took back control because we were able to break below this passive protection level set by passive buyers. So, what I'm trying to say is from this move to pretty much 940, which is around here, we were playing below VWAP. Any aggressive buying effort were not rewarded. Like anytime we come into VWAP, they get absorbed. Passive sellers are protecting VWAP, and aggressive sellers step back in to initiate price lower. So I'm looking, the way I trade, I want the highest confirmation possible. I don't like entering on retracements. I'd rather just wait for a breakout and then look to capitalize on the expansion move. And what we had here was aggressive sellers didn't get rewarded. This becomes a key level. When we come back, you're anticipating for passive buyers to step back in again. If they are unable to step back in again and continue higher, then you have your short, you have your breakout to the downside. And what would you be assuming? You would be assuming that even though you have this level over here and we come back into it, you can anticipate for passive buyers to step back in, but the chances of it doing that is very slim because even if they do step back in, aggressive buyers are unlikely to follow through with the passive buying absorption because these aggressive buyers were absorbed at the high of the VWAP. So aggressive buyers are already pretty much absorbed. So even though if we do get an absorption here with passive buying, if there is no follow through in terms of aggressive buying demand, the market isn't going to move higher. The market moves based on demand. Everyone says supply and demand, that's partially correct. However, supply just provides liquidity to the market. It just stalls price. It doesn't actually move the market, right? So, for example, here, right here, you had aggressive selling absorption. Passive buyers absorb that. But if aggressive buyers are unable to follow through, the market is barely going to move higher. Or, in this case, it does a bit, but there was no follow through. No follow through above VWAP because you're still looking bearish. But yeah, so that's the point. And once you've broken below this low, this is where I'm looking for that breakout, that break and retest. We break lower, large aggressive selling initiation. And if you zoom in here, we do have aggressive buying within the same candle as well. So aggressive selling initiation, aggressive buyers try to take back control, bring you back inside this range over here, but they failed to do so. This is where you can look for your entry, stop loss above there. And then I was looking to target around 29,000. Right, I believe I entered much higher, like there, and then stop loss was here. Because it was around a 2.5 hour trade. And then TP at 29,000. So that was the trade. Right? Super simple. The reason why I targeted 29,000 is because it was a naked value area high, and it's also a psychologically significant number. Every time you have rounded numbers, you're going to get like a large battle of orders there. That's where a lot of protection is going to be participating, like as you can see here, right? As you break below 29,000, you have large participants stepping in. So that is the trade recap for today. First trade of the week, super simple trade, very lovely short, capitalizing on the expansion play. If you have any questions, leave them below in a comment or join my free Discord. If you want to get mentored one-on-one, I do offer one-on-one mentoring where, is lifetime. I basically hold your hand throughout everything. Right? It's not one of those Discord groups where you're paying, where you have pre-recorded videos and stuff like that. Right? There's none of that. But if you're interested in that, check the description as well. Like always, if you found this video helpful, please like and subscribe. And I will see you guys in the next one, which should be tomorrow. New video coming out tomorrow.